that's a bullish sign. When the price comes down and tests moving averages and then reacts positively, that's giving you a signal that good things are happening.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Welcome, everybody, to Talking Trades. Kevin Wadsworth and myself, Patrick Karim. Kevin will talk to you today about the Holy Grail. Can technical analysis be used as a 100% reliable crystal ball? Kevin, please tell everybody that we can do that.
Yeah, sure, Pat. Let's take a look at the chart for gold, shall we? And we'll talk through whether or not there is a Holy Grail with technical analysis. So what we've got here is the chart of gold going back to the 1960s, in fact, all the way back to before I was born, certainly, and all the way through to 2019. Okay, so you can see the price of gold going up, down, sideways, up, down. One thing we need to remember is that gold overall tracks the loss of purchasing power. It tracks purchasing power destruction over time. How do we know that? Well, because over the centuries, 1 ounce of gold roughly buys something very similar to what it bought, 100 years or 1,000 years or 2,000 years ago. There are periods in time where gold will go up very, very rapidly, and it'll kind of do an accelerated move to reflect that loss of purchasing power, and then it'll kind of go into a bit of a hibernation mode for many years, and then that loss of purchasing power gets factored into the price of gold again. Okay, so now in terms of whether or not there's a Holy Grail in predicting what's going to happen with the price of gold, let's just imagine that we are back in 2019. So this is how the gold chart looked in 2019. And we've got nothing on the chart apart from some vertical dotted lines there. And that's just to draw your attention to the fact that roughly every 8 years or so, gold hits an important low point. So this is to do with cycle analysis, and it's just one element of identifying when you're likely to see a more sustained uptrend and where you may possibly see an important low being put in. You'll notice these two red lines here are quite close together. There was sort of a double bottom there in 1999 and 2000 for gold. So roughly every 8 years or so, it just gives you a sort of a heads up that you may be heading down into a low point. Now, so let's have a look at 2019 in detail. And how do we use technical analysis to give us an idea as to where the price of gold might go? Well, we can identify a horizontal resistance level. Okay, and that horizontal resistance level is right the way across here. Okay, roughly $1,300, $1,350. You can see that zone there. Every time the price hits it, it gets pushed back. Something else that we can identify is this sort of arc shape, this sort of cup pattern that is quite common, I suppose you could say, in technical chart analysis. And it happened down here as well in, just back in the year or around the year 2000 and coming out of that low there. And it's just because when the price of something hits its low point, it's going to do one or two things, really. It's either going to go down in a V shape and make a V-shaped recovery like it did in 2008, or it's going to form those rounded bottoms. So a little bit like glaciated valleys. You get V-shaped valleys and you get rounded glaciated valleys in the world of geography. So very similar sort of thing. So anyway, the point is that 1,300, 1,350 level was very, very important, that level there. Now, given a few other technical indicators, we can add some detail to that. So if we put the moving averages on, the moving averages tell you that when you are above inclining moving averages, particularly the 3-year moving average there, the green one, telling you that you're in a bullish environment. And when you drop below the 3-year moving average, you're in a bearish environment. And what had happened by 2019 is that we had kind of clawed our way back above that moving average and was starting to challenge and try to sustain being above it. Also, the moving average has started to move up. So do you see how we're building a picture here? We're saying that we've got an overhead resistance level, we've got a cup pattern guiding the price back up, and we've got these moving averages giving additional evidence. We can also add other technical indicators like the Ichimoku cloud. It's a Japanese technical indicator. When you are above it, you're in a bullish environment, and when you're below it, you're in a bearish environment. So what can we say at this point in time? I'll tell you what we can say. What we can say is that if the price moves above this 1,350 level, if then we are likely to see the price being guided all the way back to that 2000 level. Now you can see the level there, that sort of $2,000 area. If the price bottoms and then we break out and begin to move back up, we end up, I don't know, somewhere around $1,900, $2,000. Then at that point, you can see there's a cyclical low lying ahead. So what would make sense is if we come back down, test the 3-year moving average, and then gradually sort of form some kind of handle on this cup pattern. Maybe you get a little bit of bouncing around below that breakout level. And then at that point, you've got another horizontal breakout level in there. So that's a classic cup and handle pattern. And then from that point, if you break out, not saying it will, but if you break out, you then move on up towards, I don't know, $3,000. So that is the roadmap. That's how we draw roadmaps in technical analysis. It's a case of imagining all of that in your mind and understanding that if you break out above those certain levels, particular levels, then the roadmap that I just drew becomes activated. And just to demonstrate for you what the price actually did, maybe not all of you are familiar with the price chart of gold, so you might not know what happened next, but we did break out above that 1,350 level. So the forecast was for it to move back to $2,000 or close to $2,000, and then for it to form some type of consolidation or handle pattern that was forecast to last 2 or 3 years, because don't forget we had an inkling about where that cyclical low was going to be. So it enabled us to manage expectations and to realize that when we got to $2,000, it was likely that the price was going to pause there for quite a period of time. So you take profits, you look at other trades, you look at other sectors, other places to invest your money, whilst this pattern, whatever this pattern is going to be, whilst it plays out. And we don't need to fully understand in advance just exactly what sort of type of pattern it's going to be. All we know is that we've stalled at the 2000 level, and it could take a long time. And you can see the pattern here as it built out over 2021, 2022, 2023. The pattern gradually developed over time, but each time we tried to break out above that sort of $1,900, $2,000 level, we got pushed back until eventually, towards the sort of latter stages of 2024, the price eventually broke out. So what I've shown you here is moving averages and how to use them. There you go, that's that 8-year cycle low coming in there. Moving averages and how to use them. And you can see, when the moving averages, how the price interacts with those moving averages. You can see the price testing and bouncing off those moving averages. That's a bullish sign. When the price comes down and tests moving averages and then reacts positively, that's giving you a signal that good things are happening. That tested it again, look. The price came down, tested the 3-year moving average. You've got the Ichimoku cloud there as support. So all of that enabled us to have a very high degree of confidence at the end of 2024 that when price breaks out above the $2,000 level, we're going to head to the measured move target, which is $2,800. The measured move target is just a replication of that move from 2019 to 2020, where we had that move up. So we've now reached the measured move target. What happens next is part of the next roadmap. And if you're sitting there thinking, oh, well, that's all fine to say that, it's not as easy as that. Well, no, it's not easy. But if I just go to the actual chart, this is the actual chart that I drew in 2019. So this was what was published on social media. It's a matter of public record that this was, produced in 2019. You can see that I used a number of techniques here. In this particular instance, I'm showing those cyclical lows. I'm showing the cup pattern. This is in 2019, of course. So those green arrows are, what I just showed you. It's the roadmap. Those green arrows are suggesting what the price of gold was most likely to do. Fibonacci levels are on there as well. Fibonacci numbers are often important in technical analysis. So, again, the move was forecast. Price was forecast to move to 2,000, pull back to around about 1,600, and then move up towards 3,000. And here's another view of the roadmap that I did for people at the time, suggesting that the price of gold would go to that 1,900 level, have a multi-year pullback, and then accelerate upwards. So it really is a case Patrick, of putting together evidence. There is no Holy Grail, much as I wish there was. It's a case of building, and we've spoken about this before, building an evidence picture using the evidence from the moving averages, using the evidence from time cycles, using the evidence from Fibonacci, all of these different techniques that come in. Don't just fixate on one technique, because if you do that, you'll be missing all of the evidence from all of the other techniques. And just because one technique says the price is likely to go up, if you've got the other 153 indicators and techniques saying the opposite, then really you should be taking notice of that and weighing up those probabilities. And that's how technical analysis works, Pat. No Holy Grail, I'm afraid.
Thanks, Kevin. That was great. Hopefully that gave some value to our viewers. And make sure, guys, you like and subscribe so we could get more content like this.